All right, all right. All right, good morning, guys. Hope you guys are doing well today. Market looked like it bounced back. The VIX is actually all the way back down to 20, so it looks like it was just a flash crash earlier this week. Nvidia back up to 106s. We'll see if it holds. See if it holds. Oh man, is my mic working? Let me see. Yes, it is. Good. All right. Can y'all hear the music? You should be able to. Get ready to cover the news in a second. Yeah, so will this be considered a crash, or will the market continue its rebound back up? I guess is the question. Let us know live in chat. Remember, yeah. All right, just get everything ready. Yeah, so again, hopefully my hopefully my computer makes it today. John, have you looked up the Sahm Rule, and have you seen and how it applies to recessions? Yeah, so it's an economic indicator. It's by Claudia Sahm, whatever. She's an economist. She used to be economist at the Fed. Let me look it up a little bit more, give you guys some more info. But that's what it's based off of. It looks at unemployment mostly. It takes the average unemployment over the last 12 months of the last year's unemployment and compares it to the current baseline. But so I'm looking this up now. So it looks like the threshold is 0.5 percentage points, right? With last week's 4.3% unemployment triggered, are we heading towards a recession? Yeah, I mean, look, it's not a perfect science. Nvidia all the way back up to 106.50s. All right, so what was our baseline unemployment over the last 12 months? So it depends on what our baseline unemployment was. It's getting close, but the Sahm rule has to have a 0.5% increase. And even then, it's not perfect. It's not exact. It's not 100%. I think a lot of people said the world was going to end on Monday, and then the market bounced back, and so they're just kind of grasping at stuff. All right, so far we have technically increased 0.45%. 0.45% is close but doesn't exceed the zero point 0.5 percentage point threshold. It does not strictly meet the Sahm Rule criteria for signaling a recession. It's important to monitor it, but we're not there yet. Quite yet. If we got to wait 1 month to see what next month GDP showed up as. If next month's GDP doesn't go down, the Sahm Rule will trigger. But technically, we're not in it right now, according to most people. It looks like. Yeah, I mean, the question is the accuracy of this. Like, yes, if unemployment spikes 0.5%, it sucks, right? It's not good. Okay, so yeah, so it's a lagging indicator. It has context sensitivity, and it does throw out a lot of, just to put this into perspective regarding the Sahm Rule. Context sensitivity, it lags, obviously, and it has some false positives. It says there can be instances where the unemployment rate increases without leading to a full-blown recession, causing false alarms using the Sahm Rule. And so, again, I don't think we should jump to that yet. It all depends on next month. I think next month is big. We got NVIDIA earnings this month that'll influence stuff. So, yeah, just be careful. But, yeah, Super Micro Semiconductors, chat. Earnings yesterday, right? And they are down huge on their earnings report, as I thought they would be. Like, I don't play with Super Micro Semiconductors. Like, this is like a lower float version of NVIDIA, and I'm good on that. That's just way too volatile, way too risky. The good news is that the VIX has settled down a little bit. So the VIX has dipped, right? The VIX dropped and settled down some, and that's the best news we can get. Yeah, I'm in Airbnb. I know I heard some good things and some bad things, but let me check my end for this here. My Nike trade's up. That's good. Whew, Airbnb is down. I'm down about $100 on this trade. It's only a couple shares. I'll probably buy this dip, to be honest. Let me buy this. I don't mind buying this dip. There we go. Just to fix my average. It needs a large fix of it, too. I only had 3 shares, to put it into perspective, guys. So, like, my share size, it wasn't the smallest. We're going to get into a decent little position here, though. There we go. Yeah, we're basically flat right now. We'll see if it bounces back. Again, I don't mind holding Airbnb. Yeah, I mean, Supermicro got big during the AI boom, and now they're super low float. The risk is that it's low float, bro. Like, if anybody here has ever traded penny stocks, you might understand, like, the significance of low floats in stock price, right? Supermicros is a huge price stock, like a $500+ $700 stock that has a tiny float relative to any other microchip stock, right? So what this means is that the volatility of the share price swings goes way higher than anything else. Because of that, I'm not really like, it's big risk, big reward, and there is a chance that you do make money with it. But the risks are so profound here to invest in this thing, dude. I'm not touching it. I just don't touch it. I'm not touching it. I'm not covering the earnings. Like, I'm holding most of the other like stocks we have during earnings. But for this, it's just too risky. Like, I don't want to lose 30-40% taking a massive gamble. That doesn't make any sense. If I got 20K, I don't feel like losing $5,000-$7,000 out of 20K in one day on one trade. That just doesn't make sense. It just doesn't make sense. It's too risky. But again, make your money. Maybe you can buy the dip here. I don't know what it's going to do. As long as microchips hold, maybe it bounces here, to be honest. But I don't know. I don't know much about Supermicro either. All right, so, yep, I'm still in Florida. Adjusted, yes, but fake. Yeah, I kind of go back to, like, nobody cries manipulation more than somebody that's wrong. And again, I'll tell you this: if you find yourself betting against the U.S. stock market long term, somewhere you've been misled. I've said this a million times, but if you find yourself betting against the stock market, somewhere you've been misled. Like long term, because the stock market's gonna go up long term. It's inevitable. And so if you find yourself taking like shorts, even though we're dipping pretty percent, like if you shorted the market on Monday, bless your heart. Still, we'll see what happens. What's the next important date for rate cuts? Mid-September. I'm not even talking to you, Ty. It's all good, bro. I never said you said anything, bro. I'm just talking. If you're talking to me, at least I don't know if you're talking to me or not, but yeah, I'm definitely not talking to you specifically. I don't even remember who said it. What? I'm just talking about recessions and the Sahm Rule. I think it's a good. Like, I'm just looking at the Sahm Rule objectively. I'm not attacking anybody or using this as some type of like argument, like against anybody in particular. I'm just talking. We're just talking about where the market's at, what it's doing, all that good stuff. Okay, yeah, sorry. I thought you thought I was upset at you, so it's all good. Context is hard to really gauge through text. Pun intended, I guess. Stocks don't go down, never have, never will. What's down? I don't even know what down is. Any reason Disney is falling? I don't ever say guaranteed. I say almost guaranteed to make money, which is true. It's not quite 100%. If like in probabilities, like nothing's 100%, I guess, but it's pretty close. Like you're gonna make money long term if you invest and sit long enough. You just gotta. But again, crashes, recessions can happen in between those things. And again, if you find yourself betting against that, somewhere you've been misled. Like I get it, people want to be Michael Burry, but you have to have some like sense about you. You can't just get wrapped up in political media and start like betting against the stock market long term. It's just silly. It doesn't make any sense. It's not reasonable as a trading investing strategy, But all I do is lose money. Yeah, Disney's down a little bit. I'm not sure why. It went all the way up to 95. I think they might have had earnings. I don't know if they had earnings this morning or what. Let me see. Or was it yesterday? Yeah, so Disney did post this morning. They posted 139 EPS. They expected 120, so a beat on EPS. Revenue showed up at 22.86 bill versus 23.16 billion expected. Shopify showed up this morning as well. Posted a 26-cent profit per share versus 20-cent estimates. Revenue of 2 billion is what they estimated. It showed up a little bit higher than 2 billion. We also had CVS show up. BDPS missed revenue. Lyft showed up. BDPS beat revenue, but I'm worried about Lyft long term. We got Aurora Cannabis stock, ACB, a little bit better EPS, better than expected revenue as well. I'm looking at some other big stocks. We had Wix.com, Icon Enterprises, IEP, man. What happened to IEP, dude? I remember they had a short report, and I don't think they ever came back. This is one of those stocks that a short report just destroyed within a few years. Like this thing was at $50+ a share. And the short report came out right here on in May of 2023, and this thing just dumped down. I don't know much about IEP, Carl Icahn, but yeah, IEP came out with earnings. They didn't even drop theirs yet, so hey, we'll see. Here's the QQQ. Yeah, so I mean, the thing you guys got to understand, like people talk about like debt a lot. You got to think long term and what that means for everything, like the implications of long term, right? Easiest way to put it is that appreciation or inflation is going to happen, and that's going to make our debt less severe long term, right? That's why they take the debt, right? Most of the time is because it's going to be less severe as time goes on. It's kind of like this, right? Like one of the ways in which real estate as a whole, even if you're getting a mortgage, combats inflation or hedge against inflation is because like this. I'll explain it the easiest way I can. So say you get a mortgage, right? And say in that mortgage, right? Say you make 50K, right? Say you make, we'll call it 75K. Say you make 75K a year. You get a mortgage. Your mortgage is $2,000 a month, right? So you're spending about a third of that, 75K a year on your mortgage, and that's bad, right? You don't want to spend a third. That's a lot. Um, but over the next 10 to 15 years, not only are you going to be paying down your principal and interest, but the amount of money you make over time should increase. Because things get more expensive, inflation happens. So like the average salary in the US increases. It might not increase as fast as people want it to be, but say you're paying $2,000 a month. In 10 or 15 years, $2,000 a month is going to be a lot less significant on you as a person. It's going to be much less influential over your daily budgets, hopefully, as long as your income is coming up with everything else. Right. And so, in that regard, like that's kind of the same way you have to look at. I'm not saying our debt is good in the US, but it's not the end of the world either. Like over time, inflation is going to take some of it out, and that's okay. As I do think we have to be responsible. Yeah, I mean, Uncle, you're obviously trying to troll. I think you're the guy that you're Jason from the other day or whatever. And again, it's fine to disagree with everything, trying to be a troll. Um, what I'll say though is that you're telling people the wrong info. Like the safest thing you could ever do in this entire stock market is invest long term, dollar cost average into index funds. No matter what kind of crash, no matter what kind of correction, no matter what brutal thing happens to stock price, if you diversify and dollar cost average on pullbacks and big dips, you're going to make money long term, right? It's an inevitable thing if you hold it long enough. Now, I'm not giving any limits to that. Like it might be 10 years, it might be 15 years before you turn a profit. Most likely not. It's probably going to be maybe a couple years, maybe less before you start making money. But it might be longer term than that. But time heals a lot of wounds in the stock market, and over a century plus of data, stock market goes up long term. Averages about 10% a year, right? And so we can play the doom and gloom game where we're always getting wrapped up in politics and thinking that the market's going to crash and a recession is going to happen every other weekend. But again, you're kind of playing like the politicians' game there. Like you're parroting what they want you to think, and I dislike both sides. And again, I'm not saying things are great. I'm not saying things are perfect, but I think like again, if you think the market's not going to go up long term, and I hear people say this all the time, right? Uh, you say, hey, well, you could buy government bonds, earn 5% annualized, right? Every year, earn 5% for 10 years. If you want to buy treasury bonds, you can buy treasury bills, do whatever you want to do. Somebody will say, well, what if the government's not around anymore in 10 years? And it's like, bro, if the government's not around in 10 years, you got a lot bigger problems than what happened to your bond yields. You know what I mean? Like, it's not like we could say that over everything and anything. It's not a reasonable thing. Like, obviously, it's nothing 0% possibility, but you just got to be smart, guys. Yeah, no penny stocks, no mid caps. People lose a lot of money on mid caps, and I say this all the time. And the reason people lose money on mid caps is simple: is because they treat them like they're Amazon or Apple or Walmart, and they're not. Most mid caps are incredibly risky. Some are going to pop off. Others are just going to lose 60, 70, 80% a year in downtrend until they turn into pink sheet OTC stocks and then get delisted and go bankrupt. That's what's going to happen to a lot of them. And so if you invest in them like they're Apple, you're going to lose 50+% of your entire investment in some of those positions. It's just not the same thing. Do not buy penny stocks. Do not buy mid caps. I'm not telling you to do anything. I'm not an investment professional, and obviously I have no idea what I'm talking about according to a lot of people. But I'm just telling you, probability wise, long-term value investing is probably the move. Buy and you sit. If you can't do that, use a money manager. He'll do it for you. But you buy and you sit. Right. No, this is like honestly, it's interesting. I kind of go back and forth with the trolls because it's an interesting conversation. But if anybody disagrees with what I'm saying, right, they have no idea what they're talking about. They're just parroting like other stuff that they hear. Anybody that knows about investing understands what I just said is true. The only people that might say different is like if somebody's trying to sell you a penny stock course, they might act like penny stocks are the game. Or if somebody's trying to sell you a day trading course, they might try to act like day trading's the best thing you can do. And it's all subjective. I can say I like chocolate cake. Somebody else might say, nah, I like strawberry cake. It's all subjective, opinion based. But in terms of probabilities, long-term investing's the thing. Again, if I had to pick a perfect portfolio, I'm gonna pick the S&P, the Nasdaq, the Dow, gold, real estate investment trust. I'm gonna hedge it with some bonds, maybe, and maybe some physical real estate, or depending on what we want to do there. Probably buy a couple, like major crypto coins. Small percentage, but I'm gonna get into some crypto too, and that's it. And you let that portfolio sit long term, as long as it's diversified, and you're gonna be okay. Not like John because he was telling the truth about AMC in the first run. I was new to the market. I know, man. I have so many people that are trolls. They get all offended because the truth hurts, right? Like the truth hurts sometimes. And a lot of people are used to hearing marketing spit at them. They're like, oh, buy my day trading course. You could get rich if you just buy penny stocks, and like whatever they're sold on. And so the truth hurts sometimes. And so they might lash out at me. A lot of them come back and they're like, hey, you were right. My bad. Like you were correct this whole time. So hey, appreciate the real ones. There's not really any 8:30 data today, no. Drop some jujitsu on the troll, no. Yeah, and I understand being skeptical. Like I talk to a lot of people, and I'm like, hey, like, do you like? They're like, yeah, I'm sitting on 70,000 in cash. It's like, all right, well, what are you doing with that 70K? Oh, nothing. I'm just sitting on it. I'm just saving. It's like, okay, well, like I guess saving's okay, but like you don't want to like how long are you planning to sit on it? Oh, I'm sitting on this until I retire in 10, 15, 20 years. It's like, okay, well, why? Like why are you sitting on that? Like dollars are going to get devalued over time. If you don't hedge it against inflation, you're going to lose money. And now like bonds are the easiest thing. You could buy, like I said, you could buy T-bill. I've got this treasury bill ETF and it pays over 5% annualized every year. It pays over 5%. But there's some fees here, but like it'll give me a guaranteed like 5%, depending on what short-term treasury bonds are. It's not guaranteed, but whatever short-term treasury bonds are, it's going to pay me about, that. And so it's, if you want to buy physical or not physical, but if you want to buy actual treasury bonds, that's guaranteed by the US government. You're going to get your money. Yeah, he was the guy yesterday that said he created a fake account. Yeah, I think it's much more risky to just sit on cash long term, dude. That's way more risky. You know, like I don't understand that. That doesn't make any sense to me. Like, why sit on cash long term? Doesn't make any sense. Uh, yeah. Hey, what's up, Angel? Oh, for sure, Blaze. Especially over the last like 10 years, especially. Uh, if you sit on cash long term, you're losing money. There's a lot of ways that you can make safe money outside of even like this. Like, look, the S&P, the Nasdaq, they're going to give you about 10% annualized. But if you get stuck in a market crash or a correction, it's bad, obviously. Um, and so yeah, if you got money sitting, it's not the end of the world. But if you hold it for a decade plus, it's pretty bad. You're going to lose. Like, again, I can give you the math behind it. All right, so what's the average inflation rate? Let's say it's at 3%. Let's just call it 3. All right. Say you got $100,000 cash, and you're just sitting on this cash, right? If you lose 3% every year, in 10 years, your 100K is going to turn into this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you're going to lose over 25% of your cash in 10 years. 25%. You hold it for 20 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Or wait, oops. Yeah, let me go back. Anyways, you're going to lose a lot. You're going to lose like 40% over 20 years. And not only that, that's not even the thing that hurts, right? The thing that's going to hurt is that in 10 or 20 years, a house is going to be 600,000-700,000 for a small house. Things are going to be much more expensive. And so to lose money over time, the only way to hedge against that is invest it. And again, I'm not telling you what to do. I'm not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. Don't copy me. But this is pretty agreed on knowledge here. It's not like I'm saying anything super controversial. Almost everybody agrees cash is risky. But anyways, Disney down on earnings today. BDPSB revenue still down to $89. Maybe I'll buy it. I don't know. Yeah, short-term bond rates. Yeah, the yield curve still inverted. You can get some good returns on short-term bonds. Yeah, for sure. And I'll put it into perspective, right? So for this 70K, I have 70K invested in the T-bill, right? So every single month, right? Every single month, this stays flat basically, like P&L, and it stays flat. But every single month they pay me a dividend, right? So I've got about 70K invested in the T-bill here. I've done this math every day, but I'll do it again, right? So I got 70K invested in T-bill. It pays me 5.3% annualized. So it pays me about $3,700 a year or so. $3,700 a year. Annualized, or month to month, that's about $300 a month. Right, so I'm going to make about $300 a month deposited into my stock account every month. Just for parking my money here. It's not doing anything else. Right? I might as well park it somewhere. This will keep up with inflation. And then if I buy more with it, compounding effect of this, if I buy more with it, it's going to pay me more money. If I buy more with it, and so, yeah. Anyways, Nvidia back up to 107s, man. Super volatile. Just be careful. I'm not even saying the market's going to bounce back. I thought personally we would get red action yesterday, and we didn't. We bounced straight back. Just be careful. Nvidia is crazy right now. It's crazy. It is moving in a volatile way. Microsoft is up a lot too. Where's gold? Let's take a look at gold. Gold back up some. So gold is rebounded too. Not complete rebound. It hit lifetime highs back here. Hit 2,500 plus for gold, which is lifetime highs. That's great. How has other microchips performed? They're down big too. A lot of talk about like Apple. Apple bounced back some, huh? Yeah, it depends on whether they have like CDs, Dream. Like if you want to let your money sit in a bank account instead, right? You can buy certified deposits, like this is something my father-in-law talks to me about a lot, but because he's all like a big believer in CDs. And it makes sense, right? Like you can let your money sit. CDs are certified deposits. Basically, banks will pay you a yield for letting your money sit in their bank, right? You got to shop around and find it, but like some will pay 4.5%, 4.5%, or that is 4.5%, but yeah, they'll pay 4%, 4.5%. Some will pay 5%, and they'll give you a specified time. So they'll be like, hey, we'll pay you 4.3% for an 8-month CD, right? Certified deposit. Like basically, you park your money here for 8 months, we'll pay you um, this yield, right? And the good thing about CDs is that they're liquid. You can take your money out whenever you want. You might not get the yield anymore, but you can take your money out whenever you want. So your money's not locked up. It's liquid. You can move it, take it around. It's just in a bank account, which is probably the most liquid form of earning that money. Uh, yeah, I mean, Yair, listen, man, you did this the last time they did a payout and they paid you out, and you were like, oh, they're late or whatever, and you made a big fuss about it, and then they paid you out, and now you're doing it again. The payout's probably going to take a little while to hit, man. I don't think sensationalizing it is, uh, yeah, it might be certificate of deposit. Yeah, sorry. Uh, I lost most of my money in the stocks. Now I have to start from scratch. Maybe get a job with DoorDash. Yeah, get a job. DoorDash is good. Shopify for earnings came in at 26-cent profit. They slightly beat both metrics. They slightly beat both metrics. I bought some stuff. I bought Shopify yesterday. Or no, I'm in Shopify. I didn't buy it yesterday. Sorry. I think I bought Google. I bought some stuff. Not a lot of stuff, but I bought some stuff. How did Shopify? I'm in Shopify right now. Oh, good. All right. Well, that's cool. I'm actually green on my Shopify trade. That's nice, despite these big slumps we've had in markets. Honestly, my portfolio is pretty good still. Like it's not bad. Could be worse. Yeah, man. Yeah, I mean, Jason says you got to call me a troll. You can't handle the truth. Like, I think every toxic person justifies their toxicity by in ways like this, right? But it's not about what you believe. You can believe whatever you want to believe, right? But there's a different way to do it. Like you could have a normal like person conversation about it, but instead like you're reactive and negative, right? Which is probably like, every sociopath's MO, right? Like super reactive, gaslighting, like just kind of off. Like hey, it's all good, bro. Listen, cheers to you. But it's too early for that right now. Anyways, Nvidia at 107s. If Nvidia can break 110s, I think we're back to normal in the stock market. Obviously, there's a couple big events that happen this month and next month that are going to really influence the future of the stock market. Number one, we got Jackson Hole Symposium Economic Conference with Powell later this month. It's like August 22nd, I believe. Big report, big conference with Powell. Very important, like very, very important. Number two, we got Nvidia earnings later this month as well. Nvidia earnings are the end all be all of the stock market this month. Like they are the most important thing. Nothing else really comes close. Jackson Hole is legit important, but Nvidia, our last Nvidia stream, we got 10,000 plus concurrent viewers watching the stream. The one before that, we had 14,000 concurrent Nvidia viewers watching the stream. Jackson Hole Symposium will probably have like 4, 5, 6,000 people watching that concurrently, like simultaneous viewers. So we got some stuff, and the market is going to move a lot on this stuff, hopefully on the upside, but we'll see. If you make 5% in inflation, it is 5. You ain't in the same place though. Ain't you in the same place? Yes. That's agent, that's exactly the point. So Agent V said it here. Look, he said, if you make 5% and inflation is 5, ain't you in the same place? Yes. Yes, you are. That's the point. Because if you don't, you're going to lose money. If you buy 100K, if you have 100K and you're sitting on that cash, you're going to lose that money over time. If you don't want to lose it, what do? You buy bonds. It's guaranteed returns. You make 5% annualized, so it keeps up with inflation. You should, in theory, like if inflation's at 3% and this is paying you 5%, in theory you should make 2% annualized every year, because as long as inflation stays static, which might not be the case, but my point is you should make money regardless. But even if you don't make money and you just don't lose money, that's the goal, right? Preserving your money, account preservation, like money preservation is the goal. And you can gain stuff too. If you want to really gain, the stock market's what you want to do. You want to invest in index funds long term. Now I just have to wait for my next paycheck, about $1,500 a week, take that and spend it on my vacation. And during my vacation, earn some money doing DoorDash, use that money to get back into the market. Yeah, I mean, just be careful, brother. Just be careful. Like, okay, people who are struggling should not be trading, right? I always tell people the same thing. If you're struggling financially, the last thing you should be doing is day trading, especially. Um, you know, Again, if I was struggling financially, I'm using my money. I'm not trading with my money. I'm using my money to try to build businesses and other stuff that will bring me more income long term. Like that's what I want to use my money. If I don't have it, if I if I didn't have it, I would be looking for ways to build it. And there's a lot of ways. And you can do it with DoorDash, and that's fine. Like do what you got to do. Um, but yeah, that's what I would do. I'd first of all like you need a good income source as your base, and then you can play with money and do other stuff. But yeah, you need a good income source first. What's your job, Stinger? For Apex, was it a mistake to download through Rhythmic? I don't know. What do you mean download through Rhythmic? You mean download Rhythmic in general, or do you mean like downloading it outside of the source? Money equals time, and time equals money. Yeah. 100% I'm using my secondary business purpose to invest in. Right, for sure. Again, day trading is marketed as some like, oh, if you're struggling financially and you need to make money fast, you should day trade. Of course not. That's the worst thing you could ever do. Like, you know how much pressure is on you to make money when you don't have it? Like, listen, when I first got started, I had a used book business that was paying my money. That was paying my bills, but it didn't make a lot. Like it made like $3,000 to $4,000 a month, sometimes more, but I had kids and stuff. Like I was doing other stuff with it. So I didn't have a lot of money. And so I ended up losing thousands of dollars very, very quickly when I shouldn't have. I shouldn't have taken those risks in the beginning. So it's a luxury of people who are comfortable financially, and that's not everybody. Open up a trucking company, tons of cash flown in, easy, steady is the new way. Yeah, but so say I wanted to open up a trucking company, but I didn't want to actually drive a truck, right? Like I want the business to be passive in that regard, where I don't have to get up and drive wherever it is. I don't want to drive a truck. I'm scared to park a freaking, Tundra. If it gets crowded, I don't like parking my like a Tundra. I definitely don't want to drive a freaking 18-wheeler. So how do you do that, Angel? Explain it to me. I'm listening. Right, that's what I'm thinking. Like nice trucks cost 100K plus. That's a lot. How much do you consider good income source? I mean, listen, Um, for me personally, it's subjective. Everybody's different. What you're going to consider good income might be different for me. What I consider good income source, like I'm not going to start a business unless I know it can scale to 500K plus, right? Like I don't want to start a business. Again, I talked about this before. Like I had a friend that reached out and wanted me to start a jujitsu business, like a jujitsu gym. And I love jujitsu. I train jujitsu. I'm a spazzy 2-stripe white belt, but like I love jujitsu, right? But when I was talking to him and I was asking him about kind of the scalability of it, like, man, you're going to make 3K a month, 4K a month doing that. That's not enough to deal with all that headache. Like making, 40K a year is great, but it needs to be something scalable for me, like personally. But everybody's different, right? If generally, if you can make 50K a year, you're doing okay. Like you can make enough to do whatever you want to do. You just got to be smart with your money, Our trade copy are safe. Kind of. I mean, they're safe. They're safe-ish. Like, I can't guarantee you're not gonna have a glitch that wipes you out or whatever, but they're safe-ish. Like you could use them. They're pretty consistent. Uh, so I know a lot of people use them. 50K a year. It depends on where you live, to be honest. In Texas, 50K a year is plenty. Um, in New York, maybe not, or like Cali, definitely not. But it depends on where you live. If you're in Louisiana, Florida, depending on what type of Florida, not closer to Miami, but like if you're in small town Florida, maybe depends on where it is though. Yeah, we don't have any data coming out today. Disney's down big on earnings. They really negatively reacted to earnings. Yeah, so Disney had this massive drop. I don't know why, man. They just dumped fast. Look at this. Huge drop. Are we expecting a further crash? I don't know. I think it's possible we come back down. Watch NVIDIA. That's what I'm watching. Yeah, I mean, that's good. That's plenty. Yeah, 200K a year in Massachusetts is not going to be the best, right? It's just got to be more, you know. But if you make 200K a year in Texas, you're living like a king, And so it's different for everybody. Texas is just different. So is Louisiana. For $1 million in Texas, you're gonna get you're gonna get a mansion, basically, like a mini mansion, like pool, like spiral staircases, like the whole nine. Uh, you get $1 million house in Cali or New York, it's not gonna be anything close to that. So it's just different. It depends on where you live. The United States is so big. This is what a lot of people don't understand, especially overseas. Like you hear people talking overseas, like, oh, we visit all these different countries a year, and that's great. But y'all's countries are like the size of Texas, so it's just different. It's different. Like if I go all the way up to Michigan or go to California or go to New York, these are huge, long, thousands of miles drives. So it's not like driving 20 minutes away to this other small country that I can visit, and now I've seen the world. There's a lot of cultural differences as well, accent differences. People are just different wherever you go. The U.S. really is the melting pot, and so. Why do you invest in the Q when you can make more money with triple leverage Q Pro shares? Well, because you got triple the risk too. I'm assuming. In Boston, do you get nothing for that? Yeah. Yeah, Disney earnings did not have a positive reaction. Disney CFO says bundling of streaming services has had a positive impact on cancellations. Lyft CEO says primetime bookings came down in the quarter 2 and are expected to come down more in 3. Sherwin-Williams announced a two-part note offering. I'm not investing in Sherwin-Williams. All right, so some U.S. senators, Saunders and Warren, are reportedly asking the Department of Justice to investigate and possibly block ESPN, Fox, and TNT Sports, from commencing a direct-to-consumer unit, Venue Sports, via The Athletic, citing a letter. TNT, man, it's been so long. I forgot about TNT. TNT, like back in the day when you actually had TV channels, TNT was good. Good movies on TNT. Yeah, TNT, and there's a couple other ones, man. It was like TNT. I can't even think of them, but there were some good ones. Yeah, I might buy some more if it dips that much too, for sure. I'm in some Disney. I'm down small amounts, I'm sure. Yeah, we're down $40. Pretty small. I could add more to it here. My portfolio is kind of light right now. I didn't. I'm not trying to hold through a lot of crazy volatility right now. Saying America is what? Yeah, it could be monopolized. Or monopoly situation. TNT does NBA. Yeah, there's some good stuff on TNT. I don't know if many people realize the downsides of TQ and SQ. Not intended for long-term. Daily adjustments can and will lead to volatility decay. So yeah, so over time, it's gonna go down. Maybe not go down, but yeah. Yeah, but even if you hold long-term plays, like in futures, you're gonna have to sell your position every quarter. You know, so to be honest, you just gotta buy the regular ones. What's up, Tiny? Oil is too slick for me today, pun intended. I'm trading for the day. I'm blessed to be green. I messed up my profit target again. This time $100 turned into 80. I'm just glad I got it though. Hey, nice. Still thinking it's a correction of the crash? I mean, we'll see. Tomorrow we got jobless claims unemployment filings. That'll be big. We'll see what that looks like. Yeah, we don't really have any economic data today. They've been kind of packing the economic data, and it's good for me because we all have crazy stuff drop once, like a busy week. Next week, just watch the market, guys. All right, we got the bond auction on Thursday. This week. We got some ECB 10 note. Yeah, so we got a 10-year note auction at 1 o'clock today also. So we got some bond auctions. Tomorrow we have jobless claims. Jobless claims expected at 241. Tomorrow. Canadian unemployment comes out tomorrow or Friday as well. Yeah, so we got Shopify. This afternoon, we've got Robinhood earnings. So Robinhood drops earnings. I think Robinhood's up some. I mean, here's a daily chart. So the daily chart's still looking kind of rough. But Robinhood's up. They're expecting 15-cent profit per share. Last time they showed up at 18 cents, it looks like, down here. So they've rebounded some, but I don't trust Robinhood. But I also think they might be, if we dip enough, I'll buy it, but not right now. We also have HubSpot, Occidental Petroleum's probably one of the bigger earnings. Duolingo, Dutch Bros Coffee, Fastly, IONQ, come on, some other stuff. Eli Lilly, Datadog, Plug, NVAX, Kronos. Tomorrow evening, we got SoundHound, Unity. Those are pretty big earnings. Friday, we got NKLA, Canopy Growth. Oh, next week. All All right. Is that all the big earnings for earnings season, except for Nvidia, obviously? Tuesday, Seat Limited, Home Depot, Hut 8. I think that's all the big earnings, to be honest. They kept them all pretty consolidated. Cisco drops next Wednesday in a week. Alibaba, Walmart next Thursday, JD.com. Yeah, that's basically it. Yeah, next big one's Nvidia. It's going to be Wednesday the 22nd, I think, or Thursday. Target earnings. Snowflake earnings on Wednesday the 21st. When's Nvidia? Let me see. Nvidia is the 28th. All right. Fair enough. Yeah, I think we're definitely going to cut rates in September. We might cut rates. We might do an emergency cut is what they're saying next week. I think a lot of it's weighted to the CPI report that comes out. Inflation data comes out next week. It's really important. No, I'm not telling people to use those ETFs. I'm telling people if they try to invest using futures, it's not really going to work easily because you got to roll over every quarter. So basically, you'd have to liquidate every quarter and buy the better with every quarter. And so it wouldn't be easy long term. Again, I think you got to just buy. Yeah. You just got to buy the big boy ETFs, buy the S&P, the NASDAQ, But he's always volatile. Yeah. He gives me an awesome present. I hope Nvidia goes up. Supermicro. Yeah, Supermicro semiconductors dumped. Here, look at this. Bad reaction to earnings. But again, anybody investing huge sums of money in this is taking a massive risk. I've been saying this. It's just unnecessary to take that much risk. Yeah, for sure, Blaze. All good. Nvidia to the moon. All right, we got 30 minutes to chat. 30 minutes till the market opens. Is it time to buy Supermicro? I don't think I even did a poll yet. Let me do one. Do me a favor, hit the like button. We got 90 here. We can do better than that. Does the stock market continue its bounce back after the open today? Yes or no? Vote on the poll. Let me know what you guys think. Does the market continue bouncing back up is the question. I'm going to put it in sub-only mode to get rid of some of these trolls. They just seem a little trolly today. Hit the subscribe button. Hit the notification bell. We appreciate it. Views more important than likes? Well, yeah, for sure. We got about 500 people here. So, I mean, that's pretty good for a no data day. We don't have any economic reports. It's a slow week. Last week was packed. We had the FOMC, Apple, Amazon, Google, bunch of earnings. So, I think flat. Yeah, which way do we head after the opening bell, chat? What do you guys think? I bought Nvidia close to the bottom, up 10%. Nice, K. Congrats. Good job. I wish we would have a 90% crash. So we could invest for cheap. Yeah, I'm okay with investing. Yeah, Sam, I'm sorry to hear that, bro. Good luck with that, dude. I hope the smell goes away. Market will be in 0.5% range. Probably a lot of volatility though. Yeah. All right, so we made some money yesterday trading futures. And again, if you want to trade futures, check out Apex. Apex is a funded program in futures. They give you a demo. They test your skill with the demo account first. If you pass the test, they fund you. If you fail, you only lose the monthly subscription. So it genuinely limits your risk versus what you would probably do if you put the money up yourself. I lost thousands day trading in the first couple weeks of my day trading journey. Don't be like me. Limit your risk with something like this is probably the better move. You should never put up and risk thousands and thousands of dollars for your first account. It just doesn't make any sense. Everybody thinks they're going to be profitable, but you're almost certainly going to lose your first couple accounts. It just turns on you and goes. And so just be smart. Again, they give you a demo. They test your skill. The base one's 25K. They give you a 25K demo account. If you can make 1,500 without losing 1,500, they fund you 25K with a 90% split. So it's similar to putting the money up yourself. It also comes with real-time data. And if you were going to buy real-time data outside of this in a demo account or whatever, it's going to cost about 30 bucks, which is what this costs if you use my link. Value is there for sure. The futures market is very similar to day trading stocks. You can day trade the S&P, day trade the NASDAQ, basically the SPY and Q price action, gold, all that stuff. No PDT rule. And again, they paid out over $250 million since 2022. And so if you want to check them out, they are a sponsor of mine. They pay me money, and I am biased because they pay me money. Understand CFTC 4.41 and all that good stuff. But again, if you want to check them out, here is the link. I appreciate it. Thanks so much. The link, coupon code BT will get you the max discount always. Guys, check it out. All right, it is Wednesday. We ain't got no job and we ain't got ish to do, but watch the market open. Some of you guys know the reference, others don't. Isn't a Fed buying back by steady money printers go burr? Why don't they let you trade options after market hours? I don't know. That's kind of, I guess, liquidity reasons. There's a lot of, like, you got to understand, there's a lot more complexity to options sometimes. And so with strike strike prices and dates and times being such a huge influence over deltas and, all that stuff, the Greeks, you want, I'm sure they probably just keep it simple and only do it during actual market hours to kind of curb that complexity a little bit. If it was open all the time, then it would be much more chaotic, I think. Yeah, that's right. Are you really asking me for my account number? You need my social too? What do you need? Yesterday, here's my P&L, guys. Man, we killed it yesterday. We did good. Small little day, but hey, we made a couple $100. This was my day yesterday. My average losing trades a little bit more than my average winning trades. Still scalping mostly. Here's my P&L. Could be better, could be worse. That's my stats yesterday. Day trading the open. Gross P&L, profits, losses, net P&L, graph, accuracy, 80%. 80% accuracy. This was 20 trades, 80%. So we made money at 4 out of 5 trades. I'll take it. Let's see if we can continue that up today. We're going to be trying to day trade. Let's get ready. We're trading a 50K funded account. This account is up thousands, over 3 grand net is what this account is up on a 50K funded account. So we will see if we can continue the gains. Yep. Yeah, you're good. They can't see you. All right. Yeah, Tony. I don't know what they're thinking. Name, rank, and serial number. You mean how many accounts have you done? Oh, I probably lost a bunch of them. But again, you also got to understand, like, they're kind of an affiliate or sponsor of mine in that way. So, like, I'm gonna go through a lot of accounts, just kind of playing around on there. I don't actually need to get funded. I'm very open and honest about this. Like I said, the right side, I could literally buy, hundreds of shares of the SPY directly or the Q directly. I don't need to get funded at all. It's great for people that need it. And so, but we're getting ready to take a withdrawal anyway. Like, again, this account that you currently see is a funded account. I can prove this. It's pretty easy. The only reason I haven't withdrawn is because I got to change my. Here's my PA account. So you can see PA account. Our current equity is 53,124, and so we are up about 3,124 bucks. So again, I can withdraw from this account if I wanted to. I gotta change my LLC name is what I gotta do. Toss is fine with me, but for me at least. So it's not any stock. So this is futures, right? In the futures market, you can't trade any stocks, right? You can only trade a limited amount of stocks, right? Like I can trade, or you can only trade index funds mostly, and like you can trade a lot of stuff. You can trade like index funds, precious metals like coffee, cattle prices, gold, silver, platinum. I think you could trade like micro Bitcoin and ETH, but I'm not sure about Apex whether you can or not. You can trade the S&P, the Nasdaq, the Dow, the Russell. You can trade index funds, and a lot of the times those move like blue chip stocks anyway. The patterns are very similar. But again, it's just a different thing. Like Apex gives you a demo. For this, they gave me a 50K demo. I had to make 3K in profit on that demo without losing. I think it was 2,500 bucks to pass the test. I did that. They funded me 50K now with a 90% split. So I keep 90% of my profit here. And again, I can withdraw this account right now. But again, the monthly subscription, it only costs like 40 bucks. If you use my coupon code link, it'll cost you like 40 bucks right now. If you pass it, you get funding. If you fail it, you only lose 40 bucks. Putting up the money yourself, you'd lose thousands. And so it's just a way to limit your risk. If you're a good enough trader to get started for less, you can. That's all it is. Again, if you want to check them out again, somebody's asking me about it. It's the only reason I'm plugging again. Shameless plug. They're a sponsor. They pay me money, so I'm biased, of course. I always try to be honest about that. I trade off stream. You're not going to see all my trades. I'm not even claiming to be some super like great trader or anything like that. Don't copy me. I disagree. I think it's easier. So what got me on the futures is that I started trading the SPY directly. I would trade AMD, but AMD didn't have the volatility that I wanted. This was like 5 years ago, 6 years ago. So I started trading the SPY directly. I like that price action a lot. I thought it was easier to read. Is TOS better than TradingView? I don't know. Is Lamborghini better than Ferrari? I don't know. It's subjective. It's opinion based, right? Toss is I like Toss. I like charting on Toss better for sure. But I think TradingView has much more capabilities than Toss does. Right. So I like Toss better. TradingView is much more powerful, to be honest. Toss is pretty powerful too. TradingView, you can do whatever. You can do all these crazy cool things on TradingView versus Toss. Now TradingView is more expensive. Like you got to pay for all kind of stuff on TradingView versus Toss. Like if you've got a TD Ameritrade or Schwab account and you've got over $50 in there, they give you TD Ameritrade for free. But TradingView is different. You got to pay for real time data. You got to pay for updates and upgrades. It's just a different thing. There's pros and cons. All right, guys, we're gonna start day trading here. Let's see if we get something good. We're at the top of the range. I kind of want to short, so I'm gonna take one contract short of the micro Nasdaq. If we get a little bit into profit, I'll add to it. I should have taken more, I think, but it's all good. I can also add to it if it moves up enough. We're at the top of the range. All right, we're slightly green. I'm gonna add to it here just because we're flat, so I can add to it. There we go. So we break down some more. Take half off just to protect the trade. Maybe add a little bit more to it if we. Yeah, we'll add a little bit more to it. There we go. All right, so we just made a couple bucks, like $22 real quick. Just scalping the top of the range there. You can see the range. Trying to build up a little cushion. Here's the range. Pretty easy range to see. Multiple tops right there, so. Yeah, I mean, TradingView's charts are powerful. They're just super capable charts. All right, so we did get this huge rejection right there. So my short idea worked, but man, we should have made more. I might short this too, but it's down a little bit too much. Actually, I'm gonna start buying it up. We're at the bottom of the range now. 2 contracts here. We'll add to it. We got a little cushion we can play with. We'll take a larger risk now. 4 contracts. Quick little retracement back up, but kind of sketchy. Yeah, this breakdown's just too significant. We'll come back. We'll come back and maybe play some more, but all right, we're gonna try to buy back. I think it's down enough to make money on. There's 4 contracts. There we go. So half off. Didn't get the best average though. I'll see if I can add more to this safely. I'm immediately gonna sell and then start adding back to this. I know that what I did just looks a little crazy probably, but Again, I want to average it if it dips lower. I just added 6. I double clicked. Oh, man, I did not mean to double click. I gotta watch this mouse. Maybe it'll help me, but maybe it'll hurt me. I don't mind losing a little bit if I do, but dumb mistake on my end. My hands over this. I'm gonna have to cut it quick if it starts to break, but I want to see if it retraces. All right, I'm gonna take half off now. I know I'm gonna lose some profit, and that's okay. There we go. I just don't want that risk, man. I really just don't want that risk. We got the big bounce back we wanted, though. Add some more to it. Add some more down here to it. Get into a larger position. Take some more off. We'll add right back. Route. We'll look for a little dip and then add right back to it, I think. Attacking this range. We got a pretty obvious range, I think. Yeah, I think I was flat in that position, though, yeah, before I added, but maybe not. Oh, I don't know why I have question mark after live trading. I shouldn't. I didn't mean to. There's nothing ambiguous about that. All right, so we're in 3 contracts. All right, we'll add to this one too. Take a larger risk. We chop up on that range. We're back to green on the day. We're kind of just chopping around here, playing around with this. We're just gonna get out. So we fought our way back, and now we're slightly green on the day, but could be better, I guess. Okay, what's up, Casey? Hope we get a flush. Yeah, we'll see. So we got 4 contracts. I'll let the rest ride, I think, for a little while, see if we can bounce back up. Yeah. No, honestly, it was a typo, Sam, but I read it and it kind of worked. And so I just left it. It kind of seemed trolly almost, right? So I just kind of left it, like, to have fun with it. But yeah, it was definitely a typo at first. Yeah, I was gonna sell this, but I also want to let it test, I think, just to see. We got some retracement downtrends. I think it could continue higher, but it might not. I don't know. Tried so hard, but We're gonna scale up to regular contracts pretty soon. This one candle's volatile. We got 10 minutes, chat. Yeah, I finally got enough sleep. Just kind of letting my money roll up small this morning. I'll take some profit if we go a little bit higher. There we go. All right. Yeah, we've been kind of scalping around. I'm gonna switch to real accounts. Or not real accounts. Larger size pretty soon. Hey, later, Freddie. Have a great day. We got 9 minutes. Got all my parents out there. Y'all ready for kids to start school? All right, so I'm gonna take larger size here. I'm gonna take 3 contracts. Then I might add to it too if it gives me like a favorable spot. I don't mind risking what I just made. See if we get a little bit better. All right. Big risk. We got 6 contracts. Not a big risk, but bigger than we've been trading. Can't really add to this anymore. Hey, what's up, Matt? Ugh. Luckily, we built up some profit on the day, so I can give this a little bit more room, but I was hoping we wouldn't go perfectly sideways leading into the opening bell. We got 7 minutes. I'm definitely going to cut it before the open, but I'm hoping we can break down enough for me to profit still. It's a big bounce. I tend to do better after the opening bell with small calculated trades. But if I build up a good enough cushion in pre-market, I don't mind taking a risk. I just felt like we were going to run into some resistance right here, but looks like it's hard. There we go. You know what? I'm going to take like a quarter of this position off just to do it. It might not work out for me like in doing so, but limiting my risk there I think is good. E-mini Delta strong NASDAQ is weak. Yeah. I'm shorting the NASDAQ, so hopefully it keeps flushing. Oh my goodness. What happened here? What a candle. I'm gonna get out there. We're down 33 bucks. That was a candle, man. I don't know what happened there. It might retrace, but it's not worth the risk. Look at Nvidia's spike here. Nvidia's heading up. I don't want to get stuck in that. Yeah, I mean, it's obvious in hindsight. You know, everybody, after the trade is done and the direction's done, they want to say they knew it would happen. But, you know, it's all good. Like I said, we're up thousands in this account. We've made money. Don't be one of those people that just tries to poke at people after they lose. It's kind of a toxic trait, I would say. Anyway. Yeah, I mean, it's anticipating the open. I think there's a lot of people probably selling prior to the opening bell, too. I just don't want to get stuck in that. I just noticed my son changed my profile pic without me knowing. Yeah, I mean, this was really brought by Nvidia. Like, Nvidia did this, right? Like, that's probably what drug the NASDAQ up, I'm assuming, no? Nvidia just broke highs of the day, so that's probably what spiked it up. We broke this really, it's a quadruple top. All right, guys, we got 3 minutes. Top 3 hindsight traders in the world right now. Yeah, for sure. Yeah, it looks like viewership's back for YouTube, though, where we're getting like 450, 500 people here live at the open. I don't know what it was, man. I don't know if they were doing something. I was worried they were messing with something, but it looks like everything's back to normal, which is great. Nvidia is still pumping up, guys, up to 107.50s. I'm sure other microchip stocks are going to follow suit, follow it some. Yeah, I'm almost up to 108s for Nvidia. And again, this is leading the market. This is what's led the market for weeks. Hey, thank you, Frostbite. I appreciate it, bro. Thank you, sir. All right. Again, Nvidia pushing up to 108. She just broke 108s. We got a minute and a half left. Nvidia dragging the market up big right now, breaking highs, rebounding all the way back up. The pre-market high, or the extended hours high, is at 109.20, so it's right there. We'll see if we can break it. But that's what's going on right now. Nvidia dragging everything up with it. Over 108s. Yeah, I'm not messing with this right now. Again, not with Nvidia pushing up. Nvidia is going to take a lot of... Nvidia can wipe out technical patterns, I guess is the point. If Nvidia continues to surge, the rest of the market will probably follow it. Bring back the timer. I mean, I'm on a laptop, so I think for the timer I have to upgrade to Windows something else. All right, guys, here we go. 20 seconds. 20 seconds. We're watching Nvidia. All eyes are on Nvidia at the open. Be prepared. All right, there's the opening bell, guys. Nvidia over 108s. SPY at 528s. Volatility showing up. Nvidia dipping down initially at the opening bell. Doesn't mean too much. Where's Tesla at last few days? Did Tesla bounce back with us? Kind of. It's at 200s. Getting some pullbacks. Again, I'm probably bearish at the open today, but this was too risky of a play. I shouldn't have bought that. I'm going to wait. I'm going to sell it, not even look at it. It looks like it was a good move for me selling it. I think we might get bearish action, though, even though we're pushing up today, personally. But I thought we would get bearish action yesterday, and I was wrong. Look at the market go. Wow. I can't help myself take this trade. We've moved up so much short term. All right. We moved up so much short term, I couldn't help take that one. But I'm not going to hold it a long time. I just don't trust it. Nvidia broke highs, though, up to over 108.20s. Tesla breaking up, too. It's at 202s right now. So we're getting some momentum here for sure. Yeah, I'm definitely traveling on a setup now. You know, I'm going to short this again. I know it's really close to the opening bell. But I think NVIDIA is not up that much, and the whole market's been following NVIDIA. And so I think there's a chance we correct, but I might just get punished for attacking markets too close to the open again. Honestly, like, I trade the open, but not like extensively. Tesla's moving up. But yeah, we've got one micro contract, so we're letting it play out. Hopefully, settle down and fall. So, I could also add to this. I don't think I'm going to. There's the break. All right. Bad risk reward these trades, though. I probably shouldn't be taking them. Where is that orange straight jacket? What source is that on? See, there's the big dip I wanted. My thesis was correct. Like, I knew we weren't going to continue up, but, like, you know, the volatility shook me out. It's all good. A nice far. Okay, so basically, Bank of Japan has taken back their talks of rate hikes. They're not going to raise rates anymore. Yeah, see, there's the big dip I wanted. I was right about it. It just, again, my thesis was correct, but it's so volatile at the open, it's hard to take advantage of this, to be honest. Yeah, I mean, if Bank of Japan's not going to raise rates, what's going to happen is that the Japanese yen is going to look a lot more attractive to investors, and because they can use it to get cheap leverage, basically. And then they buy U.S. assets with it, so it increases buying. So if rate hikes aren't going to happen in Japan, the reason it's optimistic towards stocks is because more U.S. stocks are going to get bought up through the Japanese yen because it's more attractive in terms of leverage and interest. So yeah, that makes sense. When did they say that, though? When did that come out, Matt? Did that come out like today, this morning, or did that come out yesterday? All right, we got two contracts here. First major trade since the opening bell. Boom. There we go. All right, so we made some money here. We'll try to take another trade too if we get another retracement of this red candle. Now we got a little bit. Last night? Okay. Yeah, so the market's already reacted to it. That's probably why the market gapped up today. If it just came out, I'd be a lot more bullish short term, but yeah. I got a bad fill. I didn't want this fill. Super risky trade here, but that's all right. We'll play with it. And we just got punished. Big red action. It's all good. Like I said, we made hundreds. This account's up thousands. I'm gonna go back down to 1 or 2 contracts though. See if I can work it back. We'll add to this, and then we'll add a little bit more up here. I think. See if we come back at a double top, but it's risky for sure. So I actually got out there kind of flat. It could have been worse. I want to give it time to double top down though, but I think Nvidia's also bounced back quite a lot. Nvidia's ripping back, guys. I don't want to get stuck in that, to be honest. I don't want to play with that. So we might switch out and try to play with a different one today. I don't want to give too much back. This account we're up thousands on. It's just way too much risk, to be honest. Yeah, I think we should have a couple other accounts we can play with. Yeah. You can also day trade actual stocks. All right, so we got another one. This is a different funded account. This is an actual funded account too, so we are actually funded in this one also. So here's another one. You know, this is an account that we're trying to build up a cushion on. So let's try it. 4 contracts. Man. Definitely don't want to get caught in that, man. Yeah, honestly, a lot of techs bouncing back. Even though I'm down today a couple $100 at each of my funded accounts, my actual portfolio is very green. My Nike trade is almost completely green, which is interesting. But yeah, let me switch this. Yeah, I'm trying to switch out to a different one. Hold on, let me take this one last trade on this. I'm showing you my last trade here on this one, but it's a like we made a little bit on it, but hold on, I'll show you. It's 2 contracts. Honestly, the market's just a lot more bullish than I really. So we got out basically flat. It's just a lot more bullish than I want. I don't know what Nvidia's gonna do. We got this huge surge up and stuff. So we'll see if the market continues this big surge, man. What a crazy move. Wow. My equity portfolio is running up. So this is kind of like the closest thing to this crash, guys. Again, I'm putting up my funded account programs for a second. Closest thing to this crash is kind of like Black Monday, right? So Black Monday was a flash crash, dropped massive percentages. But then like we rebounded very quickly from Black Monday too. So we actually did catch this a little bit. Hold on. So we're only down 140. I guess I'll keep playing with this. I don't want to. The trend is up. I don't want to trade against the trend. I've been trying to catch the top, and it's just not working great for me. You guys having better luck than me? I'm in the green, nice. Yeah, I'm gonna start going with one contract here. But I've been trying to take the same trading idea. I just think we're gonna turn today. My bias is bearish, if you guys can't tell. And I know it's not the best to just maintain like a deep bias here, but all right, well that worked. We finally called. This is what we've been trying to take advantage of. All right, so we're only down $100 now. We'll see if the fight back is on. The idea for me is to trend up here. Like, here's the plan, right? And it's not really working today. But what I've been trying to do is wait for us to get extended at the top of this range and then short that top, right? And I think it makes sense because a lot of times when stuff breaks highs of the day, it's a really easy stop level. And it's also really easy to gauge that extension and get out if you need to get out. But today it's not working as well. I think another part of it is NVIDIA is kind of flat right now. So let's try this thesis again. We're going to start with one contract at the top. See if we start to come back down here. That worked. I don't know. Not really. I don't like using yeah, Lululemon back up from freaking 230s. It's just down so much. I kind of told the world this was gonna happen though. Yeah, you're probably right, Tony. I'm probably being a little bit too bearish. My bias is bearish. I think we're gonna turn and be bearish today. Where's Google at? Google up a big amount today. AMD. AMD's pumping. See, I think my bearish bias would have worked here. The same concept. Remember, I just kind of walked you guys through what I was thinking, and it worked. But I think we're also getting a lot of range chop today. So I would just be careful, honestly, today, guys. There's not a lot of easy. There's not a lot of slim pickings today, man. Or it's slim pickings today. There's not a lot of. There's not a lot of low hanging fruit today. Market's very choppy, flat, tech, sideways. Microsoft. Where's Meta at? Is Meta still down big? No, Meta's honestly back a lot. Am I in Meta? No, I sold mine. I'm going to try this again. I'm going to take one contract. Add to it now that we're in the profits. Maybe add to it once if I'm in the too far in the green. But I got to be careful now. I think I've added too much to this position. I think I've also got to take risks. Like, I don't mind losing a couple $100. I think that's necessary sometimes. To make money, you got to be willing to lose money. There we go. We're kind of going back and forth. We're down $95. I still like the thesis of the trade, but now that we're way up here. There we go. Same concept that I was looking for here. This is what I wanted to happen, remember? There we go. All right, so we basically made all our money back. We were down hundreds. Again, same kind of concept. Remember, guys, this is what I said, right? And again, I could have made more. I'm still technically red on the day, so take that with a grain of salt. But I think right now what we're seeing is choppiness, right? We're seeing choppy behavior. And so what that means is, like, even though this is the trend, you know, that's the trend. Even though that's the trend, right? Once we get to the very top of the trend line, a lot of resistance, a lot of chop pressure. And so it's very plausible to say, hey, once we get up here, short it back down. You know, again, I'm not telling you what to do. I don't know what you should do. I don't know what the market's going to do. But that's the logic of the trade. That's like the thesis of it. Yeah, jobless claims super important. Yeah, jobless claims is every Thursday. Every Thursday we get jobless claims report. So that's kind of what it is. Trying to go green on the day if I can. Almost there. Almost there. One breakdown, we'll go green. We're green. See, again, that thesis worked. So we went from down 200 plus to green on the day. I don't know what I'm gonna do today. Again, I'm still on vacation, guys. Y'all want to see my view before I close it down? Again, if you haven't checked out Apex, this is day trading on Apex. If I was risking my own money, I would have lost thousands. It just makes sense to limit your risk. Try a funded account program. Apex is one of the most legit in the world. You kind of see they pay out hundreds of millions of dollars to their traders. For the time being, you get 80% off if you use my coupon code. You'll get the base one for $30. $30. If you pass it, you get 25K in funding. If you fail it, you lose $30. Comes with real-time data, which is going to cost about $30 if you paid for it independently anyway. And in the futures market, you can day trade just like I'm doing here. The S&P, the NASDAQ, the Dow, Russell, gold. Patterns are very similar to blue chip stocks. It's just a great way to limit your risk. They are a sponsor, though. They pay me money, so I am biased because they pay me money. So if you want to check it out, here's the link. You can use my coupon code and check it out. I'm going to show you guys outside real quick, and then I'm just going to close it down. So I probably won't plug all my stuff back in. I'll show you guys my view, and then I'm going to close it down. I know you guys can hear me, so the mic's probably not that good, but this is my view for the day. You got Carol here hanging out. So check it out. Beautiful. Yeah, it's nice. Feels good outside too, honestly. All right, guys. Y'all be good. I'll see you guys later. I'll see you guys tomorrow. Y'all be safe. And yeah. I should have traded out here, really. That'd have been cooler. But yeah, guys. I'll see you guys later.